This is James A. Hirecheck with today's Autochartist technical analysis of stock trends for Monday, April 30th, 2012. With the major U.S. stock indices beginning to develop a bias to the upside based on Friday's strong closes, our technical analysis of financial markets suggests that we should be looking for follow-through rallies to drive the individual equity markets higher. Two stocks to watch on April 30th are Merck Co. and Cisco Systems, Inc. Merck & Company, stock symbol MRK, has formed a triangle chart pattern on the 1440-minute chart. Our stock market analysis indicates that Merck may be poised to break out to the upside. As of Friday's close, this chart pattern was still developing despite an attempt to break out through resistance. So it is basically an emerging pattern at this time. The market actually rallied to 38.94 but sold off into the close, suggesting the presence of sellers were still defending the old tops at 38.88, 38.98, and 3900. The most interesting Autochartist quality indicator is the initial trend. This indicator posted the maximum 10-bar rating. At the time the low was reached at 30.54 on October 4th, this area here, the initial trend was down, and it was rated a strong 10 bars. However, with a bias to the upside developing, the anticipated trend change at this time is a reversal. Now, according to the theory of technical analysis of stock trends, the triangle chart pattern is an emerging pattern and also a non-trending pattern. You can see here that despite this upward bias, that since middle of January, Merck is basically traded in a sideways range-bound fashion, at sometimes appearing very choppy. But the gradual narrowing of the support and resistance lines of this triangle indicate impending volatility, due to the fact that prices have been compacted for such a long time in this sideways range. In addition, you can see that we are nearing the apex of the triangle, which means that this market's going to have to make a move either to the upside or to the downside. Now, since the indices are rising, traders should first watch for a potential breakout to the upside. And although this triangle breakout will occur around the 38.83 area, traders should also know that the stock is close enough to uptrending support to trigger a breakout through 38.15 and also the swing bottom posted in here near the 38.13 area. Both of these points could see a breakout or acceleration to the downside if they're violated. Now, if volatility is the reason you trade, then the direction of the market shouldn't matter. An upside breakout followed by rising volume and momentum could drive the market to 39.43, which is this top here that we're pointing at, and that occurred in the middle of January. Also note that a breakout through 38.15 to the downside could trigger a break back to this level down here near the 37.77 area, this point right here, but also we could see continued momentum all the way back to 36.93. It just depends on how strong the volatility is on the breakout. Obviously, this triangle indicates that something is going to happen, and it's just a matter of whether there's volume or momentum behind the move. So again, this is a stock to watch, Merck and Company, symbol MRK. Now, another stock to watch on Monday, April 30th is Cisco Systems, Inc. That stock symbol CSCO. And again, it is a stock to watch according to the Autochartist equity research. Now, according to technical analysis of stock trends, the main trend is down because of these lower tops and lower bottoms. It's pretty obvious. It's a simple trend indicator. However, after consolidating here for a couple of days and getting a boost by the big rise in the NASDAQ Technology Index, we could be looking at a possible rally into this April 19th top near the 2031 area. And again, this bottom here that was posted last week is 1927. That was reached on April 25th. This top was reached on April 19th. Okay, if we do see the breakout, then the market could challenge this top here at 2031 and also this Autochartist key level here at 2038. Now this top goes all the way back to around March 13th when it was first formed. You can see that the market has reacted to the upside once it crossed it and also to the downside. So this 2038 is the Autochartist key level price to watch. Now traders should also pay attention to this particular range. This top here from the 2130 area all the way down to this 1927 area has produced a 50% retracement zone at 2029 to 2053. That's the 618 zone. So you have a 50% price at 2029 and a 618 retracement at 2053. So there's no guarantee that if this market breaks out it's going to move very much because of this retracement zone and these old tops here, as well as the Autochartist key level zone. Now, because the current chart of current key level formation, Autochartist stock market analysis suggests that it's going to take some strong momentum to break out to the upside. But if the stock does, then look for this support area to be established at 2038, since old tops tend to become new bottoms. And the first upside objective, again, as I mentioned, should be this Fibonacci retracement area around 2053. If the breakout is weak and there is no follow-through, then the move was likely caused by stops rather than new buying. And that should mean that the market could break back into the mid-1980s area and perhaps all the way back down to 1927. This has been James Hyercheck with today's Autochartist technical analysis of stock trends for Monday, April 30th.